From the morning reading, Friday was an odd day with a handful of stocks able to push the major indexes to new highs, especially on the NASDAQ. The NASDAQ 100 and composite indexes managed to thrust higher to new highs despite having more declining stocks than advancing one. Something only seen in the late 90s bubble was peaking. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is currently 6:23 a.m. Central Time, and I'm recording this in preparation for the market day of July the 20th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive on into the overnight report. All four broad market U.S. indices are up slightly, nothing of real note, and certainly this could evaporate by the time the market opens, but certainly it's worth noting at this point there's a slight bullish tendency on across all four. Russell's the most bullish, up about 1/4%. Crude oil's down about 1/4%. Euro's down 0.15%. Bonds, it's scratch. Gold, big mover, down 19.5 points, or 1.72%. In overseas action, China was up a little less than 1%. Hong Kong scratch. Japan up about 1/4%. Germany up almost 1%, and United Kingdom up about 1/4%. In terms of macroeconomic reports for today, nothing really of note on the U.S. markets. And in terms of tomorrow, also nothing. And actually, you can see these are very small list for the first part of this week. We really, in the U.S., have nothing until Wednesday, and that's just your normal crude oil inventories and existing home sales. So not a lot of macroeconomic reports that are going to push things around this week. So that sometimes means that we have kind of small range, small markets with not a lot of momentum. So kind of be aware of that potential. In terms of volatility, obviously you had the big day on Friday in the NASDAQ. It was up over 2 standard deviations. And you notice here the NASDAQ has been absolutely on fire of late. We've got 3 different 2 standard deviation moves in the last 2 weeks, and that's also accompanied by 3 other days where you had over 1 standard deviation move. So the NASDAQ has absolutely been on fire. But don't assume that this is broad-based. Like from the morning reading we shared, this breadth is actually quite narrow, and of course Google was a big part of this. But just a handful of stocks in the NASDAQ is leading this action, at least in the recent days. So it clearly is the most bullish index, but that doesn't mean that you can just go out there and buy, broad-based tech and think that you're going to have a lot of support for that. And on Google, in fact, we can take a look at that chart. When you see things go parabolic, and this is the definition of parabolic, you went from a week ago trading, we'll call it 550 area, to over 700. That is parabolic, and there will absolutely be people at the first whiff of weakness wanting to lock in those gains and not give back that kind of a move. So often these can retrace hard. And the first target would likely be about halfway through this bar here, so perhaps around the 690 area. And then if it breaks down into this gap zone, that you get something of a 50% retracement or a 61 retracement or even a gap fill, would certainly not be unusual in the next few days and weeks. In fact, instead of buying Google right now, it'd be terribly tempting to sell premium, sell bear call or something like that against this move. But it's got to respect it. That's a huge move. And certainly if you did go against this right now and try to fade this move, you'd want to make sure that position sizing was very much in the comfort space for you, because there's just there aren't too many examples like this, especially in a big well-known company like Google. This is not some sort of penny stock that's just going to just drop off the face of the earth. The S&P, we've been watching this move back to the top of the range, and you notice how the candles are getting smaller, and we're starting to get more of these doji-like candles. I mean, this is, you know, definitely not a bullish sign, you know, when you get to a topping area, and certainly setting up for the potential of a pullback on the Russell. Also, you see it has not, we've been talking about this for a few days, coming up against the backside of this ascending channel, and is absolutely stalled in that area and not been able to get past that, and now for 4 trading sessions has been rejected each day by that area. And of course, there's the NASDAQ, but this is again powered by Google's move. Google is a huge capitalization within the NASDAQ, so when it moves $150, it's going to take the NASDAQ with it in a big way. So this one's actually broken out of this multi-month range, and if you start to see, you know, the other components, you know, start to participate, that could certainly be something powerful there for a broader market implication. But it's kind of scary when it's driven by just a couple players. And then the Dow, much like the S&P, has made this big move off the whipsaw on the bottom when it exited the lower end of the range, only to just immediately reject that and come back towards the top of the range. But now that seems to also, much like the S&P, have the looks of tailing off and at least consolidating some of this move. But frankly, until this thing actually on the S&P breaks through the top of the range and holds that action, I'm not terribly impressed by the bull market. That being said, our regular daily guide, we've had a lot of changes here, and I want to break that down a little bit. First of all, the intermediate term phase opinion, we've gone to phase 2, trend breaking. Obviously, while we have not yet had that both higher high and higher low, we've just had a higher high. We clearly have come out of that phase 5 and more of a phase 2 kind of trend phase. So that's something to note, and certainly a much healthier stance than phase 5. Also, IBD status confirmed uptrend. So this actually happened on Thursday. Also, accumulation distribution has improved a little bit. S&P at a C and NASDAQ scoring out at a C+. GMI index is a perfect 6 out of 6 with a buy signal since the 14th. Stock charts have had buy signals come in on the short term, but still waiting for that to roll up through the intermediate term. Intermediate term market posture is very bullish indeed. If you look at these scores, S&P just went over the 80, so very bullish there. Dow as well, NASDAQ 83. Only the S&P is below 80. We'd like to see that one certainly joining the NASDAQ, and the NASDAQ going with wider breadth on this move to feel more strongly about it. But it's still, it's a very bullish score. You'd rather be an 83 than a 20, and you got to respect that. In terms of the hedge warning status, this has dropped in recent days and is now at a 0+, which is what we call normal with cautionary aspects. And some of those cautionary aspects, the distribution day count continues to be high at 5 for the S&P and NASDAQ 4. You see a lot of other things have ebbed off. We did have, and remember, this was a day in which the NASDAQ was on fire, but the New York Stock Exchange actually had a warning sign with 387 new monthly lows being put in on Friday. So that's also a sign of some of the lack of breadth in this most recent move. In terms of the intermarket risk aversion indicators, these have also healed significantly. 4 of the 5 are now flagged as risk on, with only the 1 as risk off, but it is starting to roll up. Then, in terms of special opinions, the VIX is inside the acceptable windows and conditions are acceptable for new positions for option income strategies. Just always consider the potential for increased volatility. The VIX is below a 12, so we have absolutely crushed volatility in a very substantial way in the last week, going from above a 20 to all the way below a 12 in record amount of time. Cover call strategies, conditions are acceptable to initiate new positions with the one-to-one distribution between in the money and out of the money strikes. And always keep in mind that you should initiate those in a position size that is relevant to the current market conditions, and that would include the fact that we're still inside a range, and this is not a full-out bull market as of yet. Put selling conditions are acceptable to initiate new core put portfolio positions. Just keep in mind to have that in a position sizing that you are willing to own. In terms of the relative rotation graph, we see some improvement here. We've had an awful lot of tailing off in recent weeks, but with this weekend's report, we see KRE, XBI, which is biotech, regional banking, internet. Also, I saw some other articles over the weekend commenting about the internet group, and you can see it's kind of been wiggling back and forth here of late, but bottom line is in that upper right hand quadrant in the right place and currently pointed into the right direction. So those three industry groups are of note. Sector market posture, a lot more healing here. Indeed, we see really only energy and materials looking weak across all the time frames, but a lot more improvement being seen across all of these other sectors. Percent change, actually information technology, of course, was up big on the Friday, and the overall S&P was up, but look at the rest of the components, mostly relatively down. So this is what you get when you get a polarized response, where one industry group, one sector, or even one big company, really performs in a huge way. It skews all the overall looks. It makes everybody feel like, oh, Friday was okay, it was up, and all this kind of stuff, when in fact almost everything that they held in their portfolio may very well have been down. So something to also put into your cautionary aspects. So that should be enough for today. As always, if you find what we're doing here helpful to your trading, we greatly appreciate you sharing that and liking us on the YouTube and subscribing to us on the YouTube channel. If you found us on Twitter, retweeting us to your followers, or on StockTwits and Scootify and others, greatly appreciate that as always. More information is available on the kinds of things that we do at Falcon Global. Just go to this website. Disclaimers as always. Hit the pause button if you need more time to review the disclaimers. And we'll see you back here tomorrow morning before the market opens with the market preview. Good trading.